So much to unpack here with Josh Young. He's the CIO of Bison Interest, joining us live now from Houston. We call him the bull from Bison. Josh, great to have you on today. Thanks so much for being here. So first of all, let's just start to unpack what we've seen coming out of OPEC's World Oil Outlook report. This is a very closely watched report. It gives us some key insights into exactly where the OPEC group thinks global demand is moving. And so far, it seems like the bull case for demand, Josh, is intact. What's your key takeaway?
Yeah, I think people were very worried over the weekend when OPEC announced that it would be going forward, or the group of 8 announced they would be bringing forward multiple months of cuts, that they would be unwinding them. And then when the Saudi oil price, especially to Asia, was raised the following day, I think there was a lot of relief. So that's an important background for this meeting and the report that came out, which was extremely bullish and very promising. And you could see it in the interview that you did with the Secretary General from OPEC. You could see it in a number of different speeches, as well as you could actually see the tone of some of the participants that were interviewed and so on. You could see the tone shift more positive over the course of the meeting.
So, Josh, unpack what this is all going to mean for prices as well. You and I have spoken before in the past. You previously had a triple-digit call on oil. Has anything you've heard out of Vienna or seen in the World Oil Outlook report changed that bull case for prices?
Yeah, so I actually think that OPEC might be slightly understating the likely oil demand growth over the next couple of decades. So our analysis shows that global oil demand has a tendency to rise by a little more than 1% a year, and it has risen by that more or less every year minus COVID for the last several decades. And so I think that is likely to continue. So I think they're understating things by a little bit, maybe because their last couple of years of demand forecasts have been a little high. And then we actually went and analyzed OPEC's history of success in terms of forecasting, because they're a lot more bullish than the EIA and the IEA. And we wanted to sort of calibrate who might be the best at this. And actually, we used Grok 4, which is the latest AI, which is a very a big energy consumer. And it turns out that OPEC actually has a much higher accuracy rate, at least in the last 6 years, for these sort of forecasts. So I actually think they're understating it. I think things are even better. And I think when you see the tone of some of the folks leaving the meeting, I think you can note a positive shift.
So, Josh, if that's the case, why are we still seeing some macro traders shorting oil on demand fears?
So I think the broad consensus in the market from the analyst community, from the fund manager community, from the sort of paid expert community is bearish. And, it was bearish the last time we spoke. There was some geopolitical risk that entered and mostly exited since then. And I think there is this just persistent bearishness. Maybe it's because people think that the energy transition will accelerate and oil demand will start to peak and fall. Maybe it's been more profitable to be bearish oil over the past decade than bullish. As an analyst, it just sounds, they say that bears sound smart and bulls make money. And so for oil, the bears have made money and sounded smart. And I think we're shifting now. But I think there is that sort of historical bias. And there is one other thing I think it's really important to talk about, which is Trump and the tariffs and his attempts at oil price controls.
Indeed. So unpack that for me as well, because we still don't know really what's going to happen with the trajectory of some of these tariffs coming out of this administration. Of course, the latest levy on Canada being a case in point. And of course, what we're seeing also play out in the Gulf region as well, with this threat of what could potentially be higher blanket tariffs for not just that region, but for the rest of the world. So what's the translation when it comes to tariffs, oil demand and oil pricing?
Yeah, so in terms of tariffs, I think the Trump administration, they're trying to maximize tariffs while minimizing the the economic impact on the US and maximizing the level of the US stock market. And they've been both open about that and sort of, they even posted something on the White House account on Twitter earlier today, or I guess yesterday for Europe and Asia, where they showed the stock market up, and they showed a meme. Again, this is coming from the official White House account bragging about how the stock market was at all-time highs despite some concern around tariffs. So I would take the tariff threat seriously, but I just don't think it's very likely that we have persistently high tariffs, and it looks like the stock market agrees with that. In terms of Trump's extensive efforts to talk down and force down the price of oil in particular, again, I think it's a mistake. I don't think his administration is really understanding how important high oil prices are for the U.S. economy. And I think what we're going to see, I was looking this up before we chatted, it looks like the last real effort by a presidential administration to impose price controls on oil was the Nixon administration in early 1970, and we saw within a couple of years oil prices at all-time highs. And so I think there's a decent case that a lot of the things the Trump administration is trying to do in terms of signaling, in terms of pressure on various other countries to produce more oil, trying to induce activity by U.S. companies, which has backfired and led to a lower rig count. I think there's actually a risk that in the next few years, we may see all-time high prices for oil, not just oil over 100. So there you go for bull case. And again, from tariffs, lots of concern, but also we saw what happened the last time Trump threatened tariffs. And we also saw in the first Trump administration where he seems much more concerned with the level of the stock market than in following through on any of these particular policy promises.